Hi, this is Mark with Right Line Trading. This is our evening newsletter, starting with this disclaimer that also deals with trading opportunities that are disclosed are for educational demonstration purposes only. Everyone should understand that participation in trading is risky, and that you can lose a substantial amount of money. Always carefully consider your financial position prior to trading, and never risk more than you can afford to lose. Now, um, starting on Monday, today is Thursday, we've closed out four winners, including two winners today, in which there was a tremendous red market off of the CPI, which showed inflation, I think, around 7.6%. Now, let me dispel one myth, and that is when you trade options, you should have a small portfolio of options in which it is hedged. That is what provides you with security and also sort of guarantees that you're going to make money in every market environment. You have to have every trade set up both technically and fundamentally. Let me show you our first winner, and then I'm going to review a little bit of our trade management strategy, which really has served us well. Now, the first winner was on Mosaic. Now, Mosaic was one of the few stocks to close up today, because as inflation takes hold, the price of everything in the supermarket is going to go up, and Mosaic is the biggest manufacturer of potash in the United States. Potash is the precursor for fertilizer, so up it shot. Now, we closed our position on Mosaic by taking out our first one half of our positions with an 87% profit. We then moved our stop to break even for all the remaining positions. I then set a profit target of 110% on the second half of our positions. Doesn't matter whether you sold one on the first, one on the second, five on the first, five on the second. This trade management strategy works exceedingly well. Closed our second half of our position at 110%. First half 87%, second half 110%. Next position was Goldman Sachs. Um, um, in which we entered right here on a compression signal. That's these yellow dots. Compression is just another word for consolidation. Rode it all the way up to here. Now, we closed this position out about the end of last week, or maybe a Wednesday and Thursday of last week. We took our first position out at plus 70%, brought our stop to break even, took out our the second half of our positions at 120%. Now, we've been holding Goldman Sachs for a significant period of time. You can see that I'm still holding two positions right here. I initially bought four. I closed out my first two, entry here. Now, having preset targets is so important, because this morning, when the market made a nice move up, we closed out our first target right at 50%, and brought our stop to break even. Our second target is 110%. Now, you can see that Goldman finally got caught up in the in the tremendous downdraft towards the end of the day, but we had already taken our first target out. We have a protective stop at break even, and we can't lose. Now, I shorted IBM about 3 weeks ago, based on fundamentals and technicals. IBM is really a stalled company, and it's really not going anywhere. and it was really set up for a nice bearish position. Today, it got body slammed down. It went right through our first target that was filled for, let me see what our target was here. Got everything right off to the side here. International Business Machine filled it our first set of contracts were closed at 55%, and our target on the second or remaining contracts we have on the position is set for, again, 110%. You can see that we've moved all the way through IBM, or our first. We're looking for a lot more to the downside. Now, I'm just going to show you our fifth. No, I was only going to show you four, and that's the VIX. Now, I had a tremendous feeling that the VIX was going to take a dump, excuse my expression, on today's inflation measures. Now, the VIX sort of cooled off here towards the end, as I see, but boy, oh boy, did the VIX shoot up today. Now, we haven't hit we have not hit our first target on it, but we made an enormous amount of money on the VIX. I think tomorrow is Friday. It does not look like it's going to be we're going to get an up move, and I think that if we get some further downside, we will hit our first target, take out our first set of contracts on the VIX. I bought deeply in the money calls, so when this thing went up, we really made bank on it, we have not moved we have not placed a stop. I do not place a stop on the trade until the first target is hit, and we're 50% away from the potential for getting stopped out. I want the market makers to be able to take advantage of us, so I keep things. I keep that stop away. So we're looking for a lot more to the upside on the VIX, and hopefully we will get it tomorrow. We are nearing our first target. We need another push down with the market, and we'll have our fifth winner. I didn't count it in the first four because we either closed the positions on Mosaic and Goldman Sachs, or we hit our first target, as we did on International Business Machine, and we did on Citigroup. So in this tremendous red market, I don't have my phone app in front of me, where the Dow, Nasdaq, and Russell closed major in the red, and almost all investors took a bloodbath. We wound up closing our overall portfolio in the green. Why? It's diversified and it's hedged. And when you trade that way, as soon as you enter the trade, your first target is set. You're going to see that your profits are really going to soar. Hit your first, take out half your contracts, move your stop to break even. It has really served us well. It did terrific for us on Ford recently. Took out our first, moved our stop to break even, and then Ford just came right back, hit our stop, took us out at break even, and it has really continued to really move down. So we are never going to turn a winning position into a losing position, this really assiduous trade management is really what makes you money. The mega gurus aside, who never take a loser. I'm trading, as you can see, with my own money. I mean, that's obviously a live position. It was expensive because it was deeply in the money, and I want to make money. You're welcome to join below. There's a button. You can join our options alert service, where you're going to get the, I think I'm on my fourth or fifth email this week. We send out all the positions, all the new positions, and I placed a new position today via SMS text message alert and via email. You'll never miss a trade. You can take it in your car if you're on Thinkorswim or have a good phone app. And the great thing, I'll just say the one great thing about Thinkorswim is it allows you to take an OCO order, or one order cancels the other. So if you're looking for a second target, you can also put a stop in place at the same time. You hit your second target, take out the remaining contracts you have, and your stop is canceled. Your stop hits, it cancels your second target. It's one of the rare platforms I know that allows you to take an OCO order. Now, there probably are others that I don't know of, but in general, that is just simply not a trade that you're going to be able to configure in most options platforms. So we have a home run, 4 winners, 2 in which we have completely exited our positions, 2 in which we have half our contracts out, our stop at break even, we're in at no risk, and that's the way you play this game to win. Listen, have a really, really great evening, and I look forward to talking with everybody tomorrow. Bye-bye.